Good evening, everybody. I know there's some people still anguishing because they've got long positions on, and their question is, when is this going to turn around? And I can remember somebody asking in one of the sessions not too long ago, should we be doubling down? And the answer to that is no, you shouldn't ever be doubling down. And the reason I say that is, if you're thinking about doubling down, that's because you have held on to a position that you shouldn't be in. So instead of, enhancing your wrong decision, if you were owning something that's going down, and you're thinking, I should double down, your true analysis should have been, where should I have been out of something like this? Instead of the old-fashioned holding on to something too long. Yep, so doubling down is a admission that you've held on to something you shouldn't be in, and now you're trying to rationalize or correct what you shouldn't have been in because you hope whatever is trading lower that you're going to buy, and that's going to help make back some of your losses. Where the true factor of knowing exactly what the investor sentiment is telling you is, if I'm in a situation, and again, we're just looking at the Dow, but if this had been a stock, and I'm thinking, should I be doubling down? Should I be doubling down? What I really should be doing is saying, when should I get out of this? And then my next question is this the best place that I want to have my money? So, as we're seeing in the Dow, we had a couple of days of dojis, we had the bearish engulfing signal, and then we had trading lower, which was not telling us we've bottomed yet, obviously. But we can see what's happening, especially over here in the NASDAQ. Another doji, kind of flat trading. So we still have a very simple analysis. We get a doji. If it opens positive, we're still in this sideways trading range. If it opens lower, we're in another wave to the downside. Now, more of a interday or intraday analysis is that the bullish sentiment kept stepping in every time it seemed like the Congress was going to go ahead and pass the relief bill. When it looked like it was trading up. When it didn't look like it was trading down, which meant they weren't selling in spite of a passing of a relief bill. They were buying in anticipation of it, which meant that was a little bit more evidence that this area might be the bottom of the market, and they're looking for something to step in and give a reason to be buying. So, as we saw last week, this is what I want to constantly illustrate, that the patterns are going to produce much more probabilities, or two major probabilities. One, that you're probably heading in the right direction, and two, the magnitude of a move coming out of a pattern is probably going to be a lot more substantial than just a slow uptrending stock. So as we see in Zoom, that has taken off. Another one that has, as far as the biggies, is Netflix. You can see the uptrend, but what is more compelling in this uptrend is that trend kicker signal. So if we know that is telling us there's more strength. That's telling us Netflix has more probabilities of probably coming back up and testing this level. With that information, it provides us with at least a platform to say, all right, if I'm going to start buying, even though I haven't seen a major reversal in the market, there is some buying going on right now. We can see that Amazon was up today. The market was down. What was it, 500 points? The NASDAQ was essentially flat or just slightly down. But you can see the money was still coming into this market. What was the best signal on ZM? Well, the fact that you had an inverted hammer, then you had bullish confirmation, and then bullish confirmation again, bringing you up above the T-line. If you look at this right there, what can you start suspecting is happening as far as a pattern? Wave 1, wave 2, buy signals at the T-line, starting wave 3. So this would have been your buy signal telling you that there's probably a wave 3 in progress. And these type of patterns right here, again, kind of a little scoop pattern, your doji sandwich. We're going to take a look at some more doji sandwiches, because what do we expect coming out of a doji sandwich? More upside. What was that? PTN. That was not it. So we recommended Plantronics. And again, this is kind of the reverse engineering. Why would Plantronics start moving right now? Well, they had a bullish engulfing. They closed above the T-line, stayed above the T-line. So why are they buying? Well, maybe because everybody's stuck at home using their Zoom. They need a headset or something from Plantronics. So that's why the buying. So it's not that we're looking at this and say, oh, they're buying. At least now we can try to figure out with a little bit more evidence of why they're buying. No. So the same scenario was occurring over here in Rite Aid, where we had the hammer, harami, bullish engulfing, big price moves. Now where are you? Right back up into this trend channel. So if you've got, well, I was going to say, normally you may have 10 positions on. Right now, I think I'm down to 4. But this is one of them because it had strong signals and it's still moving in this price move. I've got another one, Ping, which because of the belt hold, did kind of a doji type day today. You can see it actually closed above where it opened, which tells us, well, we're probably still in this uptrend. So normally I would close something that is below the T-line, but as you can see, this is kind of a positive day below the T-line. Now there's others that didn't show as good below the T-line. You can see the big shooting star, the bearish engulfing signal on wave. Where should we have been out if you were stayed long? Yeah, if they started trading lower again today. Now, if you did stay long, which I'm sure a couple people did, when it bounced off the 50 and came back up, it kind of gave us evidence that it was bouncing off the 50 and coming back up. So what do you need to see here to want to stay in this? You better see a positive open and positive trading. If it opens lower and starts another red candle or dark candle, that's telling you there's no buyers there. Move your money someplace else. This whole market should be telling you that if something is not working well, close it right back out, because there's Not anything showing any buying yet. What can we expect? As I said, over here on the Doji, on the NASDAQ, if it opens positive, look for possibly a Morningstar signal and keeping you in this range. If it opens lower, telling you again, wave 1, wave 2, a bearish doji sandwich. All right. Do you think Zoom is to fall from the T-line now? Is too far from the T-line? No, I think Zoom is in a J-hook pattern. Now, it might mean it's going to level off, letting the T-line catch up, but no, we could see where they broke out, whether you want to call this a fry pan bottom or whether you want to call this a J-hook pattern. It doesn't matter. The same trajectory is still very visible when you broke through that level. So, who knows, over the next couple of days, yes, if it came up here in the next day or so, yeah, I might start flipping to my 10-minute chart and see if there's going to be some profit taking. So if I've got a chart that looks like this, so we had some buy signals, it confirmed. If you bought, it's sitting right here on the T-line, and we're in market conditions that don't look real conducive just yet. Getting there. So I have a decision to make. If I had bought this, and I saw some selling, and it's trading below the T-line, or at the T-line, now I have a very simple decision to make. Oh, you know what I forgot? Oh, forgot the, Jim, you didn't even remind me. Forgot the, the little camera thing here. Oh, man. Let's see. This was the thing that was goofing. Yep. Okay, there it was, yeah. I keep forgetting. So you can see. That's right. So anyways, now we can see what to do if you own this. It has to open positive and trade positive. That's right. I've had to steal my little Sandy's grandson's mustache package that I buy him every Christmas, and they never seem to wear them. I just don't understand it. Now where was I? So here is kind of the simple analysis of candlesticks. What we're looking for is chart patterns to chart patterns that kind of give us the if-then statements, or if this starts trading positive, we want to start buying, because that's confirming our pattern. Here was a very nice looking chart over the weekend, MPLEX. Because what did we have going on? A Morningstar signal, burnt toast. Oh, man. Try to hide my identity. But notice what it did today. It opened lower. So not only do the candlestick charts tell you when it's a good time to get in, because had this open positive, what would we have going on? The prospect of a doji sandwich telling us we were breaking out through the T-line, number one, and number two, we'd have our McMuffin, which would add more credibility to the upside. Well, the fact that it opened lower today told us, we don't want to be buying this, so it kept us out of a bad trade. However, our analysis doesn't disappear. A Morningstar signal, doji. If this opens positive tomorrow, what do we have? We've got kind of that doji setup with the prospects. It could create a candle this magnitude. So it didn't tell us, all right, we're out of the, take this off our watch list. It basically said, keep this on the watch list. Let's see what it does tomorrow. And we did wave. Wave would have been one that if I saw this and didn't close out here, when it opened positive here, you'd simply put a stop somewhere, because if it didn't go this way, and it was going this way, you wanted to be out of that position. Diana, hold on to your individual ones. Oh, didn't work? Oh, okay. I thought you were asking for work. Work's got a good bullish signal. Your doji sandwich, decent looking chart, but I don't have that one up. Boeing, observe the obvious. This is kind of, why would you be buying Boeing right now? It's got everything going against it. It's in trouble. So why would you buy this? Because somebody is buying this. They gap down doji, little inverted hammer, doji. What do we want to be looking for? Some positive trading from here, giving you kind of a cradle type pattern. Where do you think your first likely target could be? Right back up here to the T-line. So why do we point this out? Is because anytime you listen to all the news and everything's bad, do what the chart is telling you. Because the rationale is, if everybody says it's bad and you're starting to see some buying, you've got to be kind of anticipating, who do you think is buying? It's the smart money starting to buy. So here's a good example of why you want to know what is a signal and what is not a signal. Tesla. What is this signal right here? We pointed out that it's not a signal. What is our likelihood if we're seeing a non-signal? That you might see a bounce, and it's probably going to resist at the first resistance level. Don, hold on to your individual ones until I tell Jim to do the double line, because we got a bunch here, and we'll probably get to most of them. The logic is, could it be setting up for a doji sandwich? It could be, but right now we don't have a reversal signal. We had a bounce. Now you can watch to see if you get some sort of buy signal. But this would not have been my buy signal. So if you see something like that, like in junk in the box, same scenario. This is not a reversal signal. So I'd be less apt to go after this type of chart because I'm figuring it at best it will reverse or it will stall at the first resistance level. We did Netflix and NVIDIA. NVIDIA, nothing yet, but you can see which direction it's going. Let's make this smaller. You can see which direction it's going. It's now starting to move sideways in the oversold area. On which one is that, Steve? Oh, NVIDIA strong after hours? Let's see, take a gander over here. NVIDIA, yeah, looks like it's trading up $5, up into the right at the T line area. So it looks like NVIDIA was closed at 212. Looks like it's trading right back up to the T line. Lily, that's what you're here for. You want to learn the 12 major signals. You want to learn which ones are the signals. There's only 6 bullish signals and 6 bearish signals. And then you want to know what those signals are. So, lots of things are up. Yes, I think right now, the aftermarket futures are up like 250 or 270. However, remember, Lily, you're going to be picked on just like everybody else. What is 303, KC? The 12 major signals are, if you go to our products and services, if you're a member, obviously you get the member discount. You can get the package for the 12 major signals. Or, if you like reading, if you get the book High Profit Candlestick Patterns, that's the second book I wrote, you get the 12 major signals and the patterns that work effectively. Oh, futures are up 303. All right, thank you, Casey. Or, what is probably the most comprehensive way to learn quickly, where this all kind of, you can get this in kind of a coordinated fashion, is on April 4th and 5th, we're doing one of our 2-day training sessions. We call it the Triple T, which is basically taking all the signals and patterns, demonstrating how they work, but in conjunction with the T-line. When you combine the T-line and the candlestick signals, you're dramatically improving your probabilities that you're in the right place at the right time. So let's take a gander here at NVIDIA. That's not a signal. That's more of a signal, and yes, today it did kind of a bullish Harami. Wouldn't be buying yet until you get back up above the T-line. We did Amazon. Amazon's in the process of doing a bobble breakout. Notice after it hit the 50, it pulled back. Hasn't closed below the 50. If it breaks up through there, you're probably heading up to fill the gap, which would also be an indication that the buying has started to come back into the market. And Netflix has a very obvious signal. There's your trend kicker signal, telling you there's probably more upside. So the big ones, or the big movers, VAPO did kind of a morning star signal, bounced off the 50. Not quite a kicker signal, but kind of a morning star signal with that kicker aspect to it. And tonight it's trading up here. So again, the signals are telling you when there's a change of investor sentiment. A lot of people are trading TDOC. You stay long on this. Notice your left-right combo and your double doji setup. I would suspect you're going to still have more upside trajectory. Yes, VAPO is up near $18 after hours. Oops, that's what's happening. I'm just reading where John Kennedy, Louisiana senator, said American people must think this country was founded by geniuses but run by idiots. I think everybody's thought that ever since the initial step. Should we be wary of getting into something that jumps so far during after hours? Yes. There are some things that you get into because they are setting up. And what they're setting up for is a good, strong price move. So there's some things that you don't get into when they have already had that price move. So if this gaps up over here, if you've been buying here, all right, now you look to see what to do from that level, not necessarily jump in at that level. So here is the charts that you want to start looking at. Look what you've got. Your left-right combo. One of your strongest reversal signals. Followed by a doji sandwich. One of your strongest signals telling you there's going to be more upside. And what else did it tell us? Told us the T-line was not acting as resistance. Now we have an extremely good probability that we're heading for here or here. This is what we're looking for, is the pieces of information that tell us there's been a change of investor sentiment. Microchip. Left-right combo. A couple of days later, we've closed up above the T-line. Now what do we got going for us? If this opens positive, you're probably going to be trading positive with at least the first target filling the gap, second target filling this gap. But what's this all telling us? More than likely, they've changed direction and they're going to bounce. Now, what do you expect, or what would you expect after these big price moves? Where would some of your targets be? This isn't quite a trend kicker. This is more, remember, a trend kicker is you want to see a big bullish candle over here. But it gives you kind of the same impression. Yeah, so that could be a target. That could be a target. What do you think everybody else is probably watching? You could probably throw your Fibonacci retracement number on here. There's one target, filling that gap. There's a second target, your 50% at the 34. And there's your third target, and then your fourth target. So not that they're going to go to one of these levels, but what we'd be looking for is if it went to one of those levels, then we watch to see if there's going to be sell signals at that point. Yeah, filling the gaps also. But what are the probabilities? This is the whole basis of what we're looking at the signals for. What's the probabilities telling us? The buyers have started stepping in, and there could be a strong bounce from here. NTNX, same scenario. Doji, Gravestone Doji, Hammer Doji, Doji Sandwich. Where's the potential targets? First target here, second target here, third target filling coming up above here, making the 50-day moving average your next likely target. The reason we're pointing these out, work is on my, there's your Doji Sandwich. Look for it to come back up and test the highs. SPWR, buy signals, kind of your Morningstar signal. Now you've had a Doji Sandwich coming up above the T-line. Target, filling the gap at the 50. So the next analysis is, if this is where, what one did I just do? CVLT, did we do that one? Yes, let's say up there. Now it's down here. And then even take a look at what Roku did today. Here's your stop end of day. Now, usually my stop would be at the open of that previous day. So look at Roku, another doji sandwich. Possible targets up here. Possible targets, but with the idea. So if I'm buying this one on positive trading tomorrow because of your McMuffin, remember McMuffin is a Morningstar signal followed by a doji sandwich, which is your morning sandwich or your McMuffin. And then what do we expect coming out of a Morningstar signal? A reversal. What do we expect coming out of a doji sandwich? More upside. So when you combine those two, that just kind of gives you a double bonus of saying you're in an uptrend. And if it opened positive tomorrow, what's it telling you? It's confirming, and it's telling you that the T-line's not acting as resistance. Where was your first likely target? Well, coming up here to fill the gap, which still would be a substantial percentage profit, and telling you at least you were in a profitable trade before you had to make your next decision. Twilio, same scenario. Doji sandwich, you can be buying. Space. You close right here on the T-line. There's your doji, kind of your inverted hammer doji, bullish confirmation. If this one opens positive, what's it telling you? The downtrend T-line is not acting as resistance anymore. Dell, hang on to your individual ones until I tell Jim to do the double line. 10, if this opens positive, where's your next target? First target, second target, third target, fourth target. Oh, space, the final frontier. Zillow, get ready to buy this one on bullish confirmation, telling you the T-line's not acting as resistance. LPG, there's kind of your doji sandwich. You can be buying this one on positive trading tomorrow. And so, here's your setups. What's the strength of this signal? It opened here and closed here. It gapped up and did a doji. If it does a positive open, what do you want to be doing? You want to be buying immediately because the doji rule says it's going to trade positive. And if it trades positive, what would you have if you took this little flutter out of here? You'd have a kicker signal, one of your strongest signals. So you've got that going on in Hasbro. Look where Hasbro closed today. Indecision, now a gap up. Let me make this bigger. Gap up doji. If it opens positive, what do you got going on? You had a flat trading series, a gap up, a positive open. It's going to trade positive, giving you a bullish flutter kicker, a strong reversal signal, and telling you the T-line's not acting as a resistance. Again, putting all the probabilities in your favor. So if you see Hasbro acting strong, a toy company, look at Visto. What type of pattern is this setting up? Anybody? There you go, a bobble breakout. Good. So what happens if this opens positive? You've probably got a good probability of another move of that same magnitude. Why is that so relevant? Because you can see exactly where the J-hook pattern was setting up right there at the the 50-day moving average breakout level. And so here is SGMS, specific games or scientific games. If this opens positive, what do you have going on? Kind of your Morningstar signal with a doji sandwich, your McMuffin. Where's your next likely targets? Gap 1, gap 2, kind of coinciding with the 50-day moving average. So again, we're able to see or recognize quite a few very strong trade setups, high probability trade setups. There's kind of a double, bullish flutter kicker signal. You took out these little flutters in here, you essentially have a kicker signal, first target the 50. So even though we don't have a full-fledged reversal yet in the markets, you can see there's a lot of bullish trades setting up, which gives you two beneficial factors. One, the trades themselves, if they start trading positive, this is pure storage, kind of a Morningstar signal, closing right on the T-line. If it opens positive, figure it's coming back up to fill some of the gaps here. At least you know you're probably sitting in situations where if the market doesn't do anything yet, you still got the prospects of some good bullish trades. Now, this has all occurred in today. I think up until Friday, there was very few trade setups that, very few, to almost zero, which is very rare when you're using candlestick analysis, because on any given day, doing simple scans, you're going to find 3, 5, 7, 8, 10 good bullish charts. But in the last 2 or 3 days, it was hard to find any bullish charts, which is a very rare occurrence. There's your doji sandwich, close right on the T-line. If this opens CAR, this is Avis, starting to move positive again. Now, look at the magnitude of move. If you buy this at 14, it comes up to fill the gap here at 20. That's 6 points on a $14 stock. That is about a 45% upside potential. Chef. This one was a little bit more of a kind of a bullish Harami doji, bullish confirmation. Same scenario. This could move from this level on positive trading back up to the T-line, giving you almost a 45 to 50% upside potential. You say 20 on CAR, and now I'm just looking at the first potential target. Whoops. I mean, it could come up here, it could come up here. But just the first potential target of filling the gap is still going to give you a 45% upside. And blue, again, there's your doji, left-right combo, doji sandwich. Not quite what I'd call a scoop, but you can see the slingshot effect starting down here that probably could take you back up to this level. That chart look familiar? Kind of the same thing that was going on here. I think even, well, it did happen here for a while, and that was on Kroger. But look at this one also, the fast slingshot effects. Oh man, did I go through all of them already? Oh. And for those of you in the options room, these were the big winners. Look what happened down here on wheat. And wheat had a 32-cent move, a 28-cent move. This meant for every $1,300 contract that you put on, I am guessing that this has been about a $4,000 profit on each $13,000. Yep. Soybeans, same scenario. Look at your Morningstar signal. Just in the last couple of days, your about $1,700 margin requirement for each contract has probably produced about a $3,000 profit. Lots of leverage. And remember, candlestick signals, somebody was saying, well, should you be using candlestick signals on these fast moving? That's where you would definitely want to use your candlestick signals, is on the fast moving ones. It doesn't matter whether you've got a slow moving trading entity or a fast moving trading entity. It's telling you exactly what's going on in investor sentiment. So if I'm trading something, I want to trade something that if I can read the candle signals, that I can make some very quick profits versus having to wait around on a much slower trading. Look what's happened here in the last few days on cattle. Cattle is down the limits. Cattle is down the limit. Cattle is down the limit. Cattle is down the limit. Notice where the uptrend started. Look at your inverted hammer, bullish confirmation. Then it was up the limit, and I think up the limit again. So there's been huge profits being made over in the commodity sector, and basically using the same concept of candlestick signals. This was down the limit. This was down an expanded limit. This was down the limit with an inverted hammer. And notice what happened after the inverted hammer. Very strong price moves. I think, well, that's why we're here. Let's take a gander at, whoops, that's not it. LAK. Crude oil. Bullish Harami. What's the Harami tell you? The selling has stopped. What's happened? It's starting to move sideways. And gold. Gold, you can see what happened after the dojis down here in the oversold area. They're starting to trade positive. It was up pretty strong today, and I'm guessing this is after hours, but it's up another $10. So the candlestick signals, somebody said, well, does this work on Forex? It works on anything that has fear and greed in it. So whether you're trading the commodities, currencies, stocks, bonds, anything, it works because it's telling you what's going on in investor sentiment. Where can we find stop-loss criteria based on 12 major signals, i.e. on the bullish Harami? One should stop out at the low of the candle. Very simple rule. Which one was it that I got into the other day? ARMN. This one. There's no formula or percentage. If this is the candle that told you the bulls were in control, what's the logic of the candlestick race traders? Where should it not close? It shouldn't close back below the halfway point of this candle. If it closes back below the point of that halfway point, who's in control? The bears are in control. Now we can add an additional criteria that says, if we see a candlestick buy signal, which way should it be moving? Above the T-line. If it closes back below the T-line, close it out. So for those of you that get concerned that you get losing trades, I was just happier than a pig in doo-doo when I figured out that 2/3 of my trades are positive. I'd heard back in the good old days that if you could hit 50% of your trades positive in the commodity area, you'd make a fortune. I'm thinking 70%, that's great. But what I forgot is the other 30%, which is if you don't know what to do or if you don't learn using candlestick signals when to close out a bad position, that's going to tear up your returns. If I'm buying a position now and I have to close it right back out, it used to just kill me emotionally. Say, man, am I stupid? What was I doing wrong? Well, what I found out was I'm not doing anything wrong. 1/3 of my trades aren't going to work. If it doesn't work, close out the position and go move your money to something that's working. Yes. So right now in this market, anytime you see something that might not be working, now had this closed right here today, what was it telling us? We shouldn't be in that position. Close it out. Why? Because the market is telling us it's not in good shape just yet. So if we're buying something that looks good, and then it turns, and we hold on to it, we're holding on to a position that doesn't look good, and we can't blame the market, or we want to blame the market, but that's not the point. The point is, if this doesn't look good, based upon whatever reason in the market, close it out, because what you're hoping for at that point is that if the market turns up strong, that maybe this will come back up. And that's not what you're looking for. You're looking for the stocks that will be moving up instead of ones that you got into that didn't work out and now you're hoping they're going to go back up. The reason I point this out is, being the worst investor in the world before candlesticks came along, everything that I built into my analysis of a candlestick chart was, how do I keep my emotions out of this trade? When I started putting on trades and they didn't work, I'm thinking, oh man, that's my fault. When I realized that probably 1/3 of my trades aren't going to work, close it out and move on to something that's going to work. Okay, I guess that's about all I got for today. There's still a lot of charts that look extremely good, that if you buy on positive trading, do you always wait till the end of the day? No. If I see something I'm trying to find something that, if I see something that's selling off, the market's selling off, and whatever I have is trading too low, like back below the previous days, is down, hold on to each one and each individual signals until I tell Jim to do the double line. I'm trying to find something to illustrate, and it's probably not on this chart. Let me find something else. For example, let's take a look here. Let's say I went long on this day, and next day it opened lower and started trading up. But after about 40 minutes, it started coming back down through here. I'm closing it out during the day because it's kind of confirmed my signal. For you, new folks in here, the blue line is the 50-day simple moving average. Let me go to a chart that has all of them. Well, Shazam, where's the... Oh, for crying out loud. Where's the 200-day moving average? Add a study. Oh, there it is. The red line. I wonder it looked kind of bland. The red line is your 200-day simple moving average. The reason we have these two moving averages on the charts is because every major money manager around the world has those moving averages to make their decisions about their portfolios. We have them because we can see graphically exactly what their decisions are at those levels. The black line is your most important. This is what we're going to be emphasizing on the training on October 4th and 5th. Now, remember, these are 2-day trainings. You're going to get a heck of a lot more information than you think you can comprehend. But the nice thing about candlestick analysis is it's all simple graphics. And if you want to go through and you learn the signals, starting from the doji, kicker signal, the 12 major signals, and the patterns, but you learn them in an order that everything kind of comes together and makes sense. And when you apply the other moving averages, especially the T-line is the most relevant. The T-line has a very simple prospect. If you see a candlestick buy signal, let me go back to Tesla because this one's always a good one to use. But let's see, before I go to the T-line. The T-line is the 8 exponential moving average. Very simple trading rule. If you see a candlestick buy signal and a close above the T-line, you're in an uptrend. If you see a candlestick sell signal and a close below the T-line, you're in a downtrend. And you see a candlestick buy signal and a close back up above the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So if you start seeing, and remember, this goes to the very basic understanding of human nature illustrated by the Japanese race traders. Where do most people buy? They buy exuberantly at the top. How do we know that? Or how do we know they're buying exuberantly? Because you start seeing gap ups up here in the overbought condition. And they start getting to be big candles. And when they gap up and they're that far away from the T-line, all we do is we flip to our 10-minute chart. So this is, again, using the simple analysis of what human nature does. Where do most people buy exuberantly at the top? Now we know exactly where to take profits. So on that day, with some of the traders in the options room, closing out positions up here because we flipped to the 10-minute chart, and that's where the 10-minute chart started coming back down through the T-line. So everything you learn about candlestick analysis is just common sense put into a graphic depiction. So simple moving average, 200. Simple moving average, 50-day moving average. The T-line is the 8 exponential moving average. The 34 is this dark gray line, which works relatively effectively. And this little green line is the 3T line. With working in conjunction with the T-line, it acts like a little faster confirmation. Notice when it started to reverse. When you saw a candlestick sell signal and the 3T line came down through the T-line. How did we know this was probably a bounce versus a reversal? Notice they couldn't get back up above the T-line, and notice the 3T line couldn't get back up above the T-line. So these little subtle indicators or indications is what greatly enhances your trading ability to get you out of bad positions quickly and keep you in good positions until they come to a good conclusion. Yes, look, now remember on Tesla, we were saying, all right, this is not a reversal signal, but this is more than likely a bounce. And where did we think it was going to bounce to? Right smack dab to the T-line. Now it's pulling back. Is this out of the picture yet? I wouldn't be buying this yet, but if we see a strong, maybe left-right combo that comes back up tomorrow and closes at the T-line, now you get ready to buy. Is there anything special about the 10-minute chart or the 5-minute or 15? serve about the same purpose or find reversals when you're far away. I just happen to use the 10-minute chart because it's kind of my bellwether chart. Now, whatever you want to use, if it's the 15-minute chart, and let's say you use a 15-minute chart up here, and you see the 15-minute chart starting to get a little bit soggy, well, the worst case scenario is you flip down to the 10-minute chart. If it's looking bad, you look down at the 5-minute chart. So somebody was emailing me today saying, I understand the 5-minute and the hourly chart work well. Find the chart combination that works well for the type of trading that you're doing. If you're I used to trade the E-minis off the 1-minute, 3-minute, 10-minute chart, which meant I was trading fairly active. Or if you're trading if I'm trading soybeans, bah humbug. I'm trading the soybeans usually off the 10-minute chart. So if I look at my daily chart and say, oops, I've got a Morningstar signal in the oversold area. If it starts trading positive, I probably want to be oriented more toward the positive side now that it's above the T-line. So how do I trade it? I trade it to the long side. So I might be buying here, I might be stopping out here. There's a Morningstar signal after trading flat. There's my doji sandwich on the 10-minute chart. I'm staying long until it comes back here. Now it came back up. This is probably after hours. Would be buying it back. So remember, the candlestick signals and patterns work just as effectively on the 1-minute chart as they do on the monthly chart. If you always go back to your simple definition of a candlestick signal, it's the graphic depiction of everybody buying and selling during a specific time frame. And that specific time frame could be your daily, weekly, or monthly, depending on how long you want to hold a position, or your 1-minute, 5-minute, 10-minute chart. But again, it's all a function of which ones do you want to use. There's my 10-minute chart. Is it too much different than my 15-minute chart? So that all depends on how you want to use it effectively. So if I was trading Boeing, maybe I'm closing it out here with the expectation it's coming back to this level. Or if I want to be holding it, maybe if I'm trading off my 10 or my 15-minute chart, I'm not really selling it because it hasn't come back. So again, you figure out the different time frames that you want to use because it's going to give you the same information, but it's going to kind of match up with what type of trading you're doing. If you're trading intraday, you might use a faster chart. So if it closes below the T-line on the 10-minute chart, you should close. I asked as some close below and then start reversing. You do if your daily chart has moved dramatically away from the T-line, which in this case it hasn't. But if you get into a situation where you know you're too far away from the T-line and it's trading up here, if it was trading up here after opening here, what type of candle would you have? A big green candle. No sell signal. But what's your alert? Gap up, big price move, gap up, big price move. What's the first thing we want to do if we see a gap up in the overbought condition? Start watching for sell signals. So up here, that's when I flip to my 10-minute chart because I've already got the alert that I'm too far away from the T-line. That's when an intraday chart becomes more relevant. Okay, so tomorrow, right now, or what's the pre-market future showing right now? Up 400. So that puts it probably somewhere up in here. If they reverse this and do kind of a morning star signal, that's going to be significant because you're back into this flat trading range after doji in the oversold area. That becomes more indicative that they're basing in here and that the buying is coming in. Now, yeah, hopefully a morning star signal. But remember what the where the pre-market futures are most relevant. 7 minutes or so before the market opens. Last night, darn, I can't remember. Last night, I thought I saw the pre-market futures were down the limit. The Dow futures were down 800 points. But this morning, at one point, the pre-market futures before the open was up 500. And then when it opened, it was right around up 150. So remember, the only place that it becomes important is about 5, 7, 10 minutes before the market opens, because that's where all the big money is putting in their decisions to buy and sell. So don't make your decisions based upon what's happening after hours. Okay. Oops, private message. I think they will be sending out a link for the sign up for the April 4th and 5th weekend. If you haven't done a candlestick 2-day training session, you want to do one of these, especially with the Triple T combination in there, because what that does is takes all the individual lessons that we've seen on a night like tonight, where we're seeing some of the signals like the doji sandwich. What happens is when we do it all in a chronological order, you get a much stronger comprehension of what the investor sentiment and logic is when you're analyzing charts. When I started looking at candlestick charts and learning what the signals were telling me, I had a completely different perspective of when I should be buying and when I should be selling. Obviously, because I was the worst investor in the world before candlesticks came along, I knew exactly when I was that seller at the bottom or that buyer at the top. So I could graphically see that if I was that wrong, that constantly, all I had to do was turn my analysis around 180 degrees so that I could answer my own question, that when everybody was selling at the bottom and I was selling at the bottom, how come as soon as I sold, the price turned around and headed right back up? I mean, if I ask myself once that question, especially after 8 years of being a stockbroker, I asked that question to myself probably hundreds of times. So I realized that I was doing the wrong thing, and now on the candlestick charts, I could see when that was happening. Okay. Any general questions on candlesticks? No, not really, RW. If I was buying on this day, and let's say I was buying up here, I was buying because I knew this pattern should be working. So it didn't matter whether I bought here or here. I wanted to see what happened by the end of the day, and that I was concluding that this pattern was setting up. Now, near the end of the day, let's say the market looked like it was starting to fade, I might say, all right, I'm going to put a stop down here below the low because it shouldn't come back down here. or I might put a stop someplace that tells me, try to think of one. There was a few the other day. Let's see, was this one of them? No, that wasn't it. I can't think of which ones they were. But essentially what they were is something like this, where they started trading positive, and then at the end of the day they came back down through the open. That's where you should have had your stop, because if it was going to trade lower, I mean, you had a big shooting star weekday closing back below the T line. Okay, Don, well, that's a good looking chart. There's kind of your inverted hammer. This one you can be buying or stay long, because on buy signals it did breach the T line. Just watch what happens at the 34, then the 50. Hold on, everybody. Okay, do we have any general questions on candlesticks? Do we have any more questions? Somebody was private messaging. Any more questions on the April 4th and April 5th training? How many positions should he be in with all these good opportunities? Nick, that's another thing that we go through when we're doing these 2-day trainings. The biggest demise for most investors are their own emotions. So everything I have set up as far as trading is to eliminate my emotions out of my decision making. So real quick, a simple money management setup that keeps my emotions out of my trading is, if I've got a $500,000 account, I decide, all right, I'm going to put 10 positions on. Now, Susie Orman says you shouldn't have any more than, 4% of your money in any one position, which means you have 25 positions on. And my criteria was always, if they pay money or analysts on Wall Street millions of dollars to analyze 6 or 8 stocks, and most of them can't do that very well, how do they expect us to manage 25 positions? The Army says the number 7 is the optimal number to be controlling. That's how they set up their divisions and their companies and that sort of thing. I use 10 because I can go through 10 positions very quickly with my analysis each day. Kramer say 10. I hate to think I said the same number as Kramer. But with 10 positions, I can go through the charts in a matter of 10 charts in a matter of probably a minute to see which ones look like they're in trouble. And the ones that look like it's time to come out of, I'm trying to think of, I can't even think of which ones we came out of recently. But the ones that we came out of, or the ones that look like it's time to come out of, because of the simple scanning techniques for candlestick positions, I have 4, 5, 7, 10 good prospects. If I've got 1 or 2 in my portfolio that look like it's time to get out, I've got a supply of stocks that I can move that money to with much greater probabilities that they're going to continue to make money. So now what that does is that keeps you from adding more and more positions. So if I see a fantastic chart setup, I'm going to think of one. Excuse me. let's say I really like this position, and I've got another position that looks something like that. Or I'm thinking to myself, if this starts trading lower tomorrow, time to close out, because that looks a little bit iffy, even though it hasn't closed below the T-line yet. And then I'm going to go move to this position here, because I know things are moving in this direction. What that does is it takes me out of positions that might not be showing that it's a true sell at that point, but I'm constantly cultivating my positions to the better positions. Do you know the times in general during the day when the markets adjust? Not really. And again, JP, it's all based upon how much I'm trading the positions I'm in. I'm a swing trader, so I'm usually holding my positions on an average of 2 to 10 trading days, which means I don't really care, and that's what the Japanese rice traders say. The important factor of a candlestick chart is where does it open and where does it close. So, do you balance your option position and keep approximately fixed? No. If I think the market is heading down, unfortunately I covered all my short positions a while back, not thinking it was going too much lower. But if I'm analyzing the market and I'm thinking it's heading in this direction, I might be 8 positions short, 2 positions long. If I'm looking at a situation like this, I might be coming out of 5 positions short, 5 positions long, now converting a couple of short positions or closing. Now I might be 6 and 4. Over here I might be 8 and 2 and hold 8 and 2 all the way up. So it doesn't, the only time I am probably 50-50 is if I'm in a kind of a chart or in a trend movement like this, where I don't know whether we're going up or down. But doing the scans during the evening, I'm probably coming up with 5 good longs and 5 good shorts. And when I'm doing my scans, I'm probably seeing still some good longs that are good prospects and some good shorts that are prospects. So it's not that I flip from going from long to short all in one day. It's probably a slow process that by the time the market turns, I might have been 5 and 5, now 6 short, 4 long, 8 short, 2 long. So I'm heading in that direction at the right time. Ooh, coughing here. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.1 seconds, do the next double line. No. Let's see, some quickies. iRobot. This one you can get ready to buy. Bullish Engulfing, Doji Sandwich. Good chart. Micron. Nothing yet, but if this opens positive, you can be buying it, but then you use today's or that open as your stop. You don't want to see it come back down through the T-line. Nugget. Flat. Is that right? Is Nugget at that price? That doesn't seem right. Thought Nugget was much higher than that. Shopify. Get ready to buy this one on positive trading. today's close above the T-line. Lulu, another one you can buy on positive trading tomorrow. Use the T-line as your stop. ZS, stay long. This is what you call three white soldiers. Now, people have been saying, oh, there's, when I ask people rhetorically what this signal is right here, their answer has been one white soldier, which apparently is on the internet somewhere as a reversal signal. There is no one white soldier. That's just an up day. Now I forgot what we were doing. Oh, ZS. ZS, this is three white soldiers, which is a bullish day. It opens lower, trades positive. Opens lower, trades positive. What that basically tells you is as it was going up, they were taking profits, but then buying. Taking profits, then buying. It's a good, strong reversal signal. Kayla. It's a slow uptrend. I would think this one, this one was looking better. This one has probably better prospects. Kala on positive trading tomorrow. Kayla is okay, but not great. And TNVA, nothing here yet. Not until it gets above the T-line. You had a big bullish Harami telling you the selling has stopped. Now you don't want to be buying until you get a close above the T-line. Hilton, nothing yet. I wouldn't be short, but I wouldn't be long. The reversal started when you saw that gap down doji hammer in the oversold area. Now you definitely need to see it get up above the T-line. And Hertz, this one you can be buying on positive trading tomorrow. That's a good, strong chart. AGNC, nothing here yet. I wouldn't be short, but I wouldn't be long just yet. And Halliburton, we were discussing in the room earlier today. Halliburton, I wouldn't be buying as a trade, but you can see where Halliburton has come from. Basically, the $24 area, now it's the $25 area, and it's in the $5 area. I would be definitely buying this one if I was putting something away in a longer-term account, because the worst-case scenario, maybe 2 months, 5 months, if it comes back up here, filling this gap, that's still over 100% upside. And right now, I guess somebody said it was paying about a 14% dividend yield. Intel, nothing wildly exciting here. You can be buying this one because you had kind of the Morningstar signal with the inverted hammer. Your upside potential isn't going to be spectacular, but it can be bought. And Fro, nothing here yet. I wouldn't be long or short this one. Chipotle, you can get ready to buy this one on positive trading. The VIX sold off hard, so that's kind of telling you something that you might want to watch to make sure or kind of indicate that there's things settling down a little bit. Twilio, you can be buying this one, good chart. FedEx. Another one, you stay long, but I'd have a safety stop at today's low. If it came down through there, it's going the wrong way. Starbucks. This is a perfect example of you watch to see what happens when you get to the T-line. So if I had bought here, when it came back down through the T-line or the open, I would have closed out the position, because what do we want to see after a buy signal? We want to see it trading up above the T-line. Right now, I probably wouldn't be long or short Starbucks. Just nothing to give you any good direction on that one. AVLR, inverted hammer, bullish confirmation. You can start buying this one. And glue. Nothing great here. You can see how it's had a hard time getting through the 50. But you do have a bobble potential. I'd be a buyer at 658, knowing that you did a bobble breakout. And TripAdvisors, bullish left-right combo, doji sandwich, another one you can start buying. Heffa, another one you can start buying. Make sure your volume is pretty hefty on this one. What's your next target? Probably back up testing that recent high. KZR, Morningstar type signal, stay long. Figure here's your next target. Delta, nothing. If you're short, you stay short, but if it opens positive tomorrow, I'd start covering short positions. Same scenario on American. You can see how they're starting to, with the inverted hammer, you're starting to flatten out in the oversold area. I'd have a buy stop at today's high. If it came back up through that direction, they're heading positive again. Silver, flat. I wouldn't be long or short this one until you see which way it wants to go. MAG, another silver. You can stay long as it stays above the T-line. Ollie, nothing yet. First of all, you don't have any great reversal signal and you're still trading below the T-line. I'd still be someplace else. AAOI stayed above the T-line today, so you stay with it. Now, had this done this, if you bought on this day and it opened lower, you would have closed out the position. And AHPI, nothing here either. You had the potential of a breakout, and it went the wrong way. So which way is this going right now? Nowhere. So I'd be someplace else. Home Depot, nothing. I wouldn't be short, and I wouldn't be going long just yet. No direction. Silver. Whoops. SLV. Oh, what's happening here? How did that turn on? That's my voice activation. Getting stronger. Let's see, K0. So this is what's going on in the May contract of silver. There's your inverted hammer, bullish confirmation, maybe heading back up into that level. Which means gold. Did we do gold earlier? Gold starting back up off the dojis. And deer, if you're short, you stay short, but you also watch. If I was short and still short, I'd put a safety stop just above today's high, because you can see how there's a support level right here. I wouldn't be going long until they can get it back up above the T-line. Dell KFMN is not working. I think we did Shopify. Shopify, you can get ready to buy this one. I think we did Micron. You can get ready to buy this one on close above the T-line. And Western, nothing yet. You have to wait for this to close up above the T-line. that's the dollar. You can stay long on this one. The dollar is pretty strong, which is not good for shipping overseas because it's costing them. So you'd like to see the dollar back off if you're trying to get your overseas sales up a little bit. Overstock, you can stay long on this one, with the expectation of it coming back up to the 34, which is also filling this gap right here. If you have to pick from HT or CVLT, which, I don't know. Let's see, HTZ. Probably CVLT. Those are good solid signals. Nothing here. If you've covered your short position with it that close, if you're long, you can stay long, but it needs to get through the T line. If you're thinking of going long, it needs to get through the T line. AMGN, nothing. If you're short, you stay short, but use today's high as your stop. CNI, that one is Canadian Railroad. If you're short, you stay short on this one also. And Cuervo, if you're short, stay short also. Cisco, as long as you're below the T line on those. Cisco, here's a perfect example of if you were buying on positive trading and it closed back here, what did it do? It did a bearish engulfing, even though you're not in the overbought area, but closed below the T line. What's that tell you? Your T line is still acting as a resistance. I probably wouldn't be long or short Cisco right now. DBA, you can buy this one. Well, that's the agriculture fund. Yeah, you can be buying this one. You won't make a whole lot of money, but it's moving in the right direction. And SMH, I wouldn't be long or short. There's absolutely no direction until they can get up above the T line. Apple did the hammer type signal in the oversold area. If you've stayed short, now you watch for a positive open. If it opens positive from here, you cover your short position. You don't go long until you close up above the T line. In space, you can get ready to buy this one if you like it, if it opens a positive. Now remember what happens when they start running exuberantly and it gets not killed, but they start selling it off. It takes a long time for them to come back. There's always that time frame where they start trading sideways after the big sell-off. NVIDIA, nothing yet. Right now, I wouldn't be long or short NVIDIA. Oh, they adjusted? Okay, thank you, Bill. Baidu, I haven't looked at Baidu in a long time. Nothing there. I would have covered short position, but I wouldn't be going long. And GDX, same thing, no direction right now. I'd have money elsewhere. Chewy, you stay long as it stays above the T line. APT, yes, if you are short, I'd stay short. I don't know whether I would short it here, though. Maybe you'll come down here, but you're in the oversold area. It wouldn't be my first one to go short. If you were short, Look for it to come back to the 50. Square, nothing. I'd be someplace else until you see a direction. And Disney, ruh-roh. If you're short, you stay short on this one with a safety stop just above today's high. Yeah, I wouldn't be long. No, I wouldn't be going long on Disney. Nothing there yet. And Boeing, that's more indicative of a potential reversal with the 4 doji type days down here in a row. That's telling you there's indecision. And CVX, Chevron, nothing yet here. You stay short on this one. Southwest, nothing yet. Another one that you probably, if you're short, you get ready to cover the short position, but you need something powerful to tell you to go long. So Starbucks, I thought, it has the potential, but you're down here in the oversold area. So it has just as much potential as kind of starting a slow uptrend. So right now, I wouldn't be long or short Starbucks. Just nothing there to give you any advantage of knowing which direction it's going. ADMS, there's kind of your doji sandwich. You can buy this one on positive trading. Nvidia, nothing yet until they get up above the T line. And ATVI, nothing there either. That's just a junky chart. Even though it's bouncing off the 200, there's no buy signals there. I'd be someplace else. And Goog, another one that if you've stayed short because it's never closed above the T line, now watch to make sure that I'd probably use today's high as a stop. Albo, you can buy this one on positive trading, your doji sandwich breakout. Electronic Arts, another one that I wouldn't be long or short, just nothing. There's basing, but no real buying going on just yet. SVM. This one you can get ready to buy on positive trading, your bullish flutter kicker. Just make sure there's lots of volume on this one. ASYS. Nothing here either. Not until you see something that can tells you which way they're going. And PETS, same scenario. Nothing of any major consequence on this one, especially until they break this downtrending channel. Blue had a good looking chart. There's your doji sandwich. I would suspect if it breaks out through this level, you've got some good running room. And EMR, if you're short, you stay short. SDC, another one that I probably wouldn't be. If you're short, you can stay short. Come on, get this one moving. Wouldn't be a buyer of this one yet, not until it gets back up above the T line. Bed Bath & Beyond, well, for crying out loud, here I thought I'd be a speed typer. You stay short on this until you see a buy signal and a close above the T line. Macy's, stay short. APLE. This one you can get ready to buy. Make sure the volume is good. But you have kind of an inverted hammer, bullish engulfing. I'd still wait for it to close above the T line. Zoom, you stay long, thinking that wave 3 is probably going to take you up in toward about the 175, 180 level. And Marna, nothing there. This kind of killed it. The dark cloud, I wouldn't be long or short this one. And AMD, you can get ready to buy this one. It's not a very exciting one right now, but if it trades positive, you can start buying it. And Domino's, nothing there either. Not until it can break out. That's just not a very good looking chart. Now, you're going to see a lot of them that aren't very good looking charts, but you still have some that are showing you good strength. So as far as the biggies, probably Netflix would be the one that I'd go after with the most enthusiasm. ATVI would be good for a short-term credit spread. Yeah, you're pushing it. That's just not a dynamic looking chart. I think you're probably trying to find something on that you're hoping for. Because there's no reversal signal. It's just consolidation. If I had money to put for long term, yes, I would be buying Boeing, and even for short-term trade, I would suspect on positive trading they can eventually bounce this back up to the T-line. CGC, another one you can be buying on strength tomorrow. Hamid, did you just get here? You're almost at the end. Good evening. Gil, if you're short, get ready to cover, especially if it comes up through yesterday's high. And Ozark Bank, you can see kind of the failure. You stay short on this one. We did NVIDIA. NVIDIA, I wouldn't be long or short. I wouldn't be going long until it gets up above the T-line. Guild, this one's not showing you anything. It's stuck in a sideways mode. And KDMN, that's a good doji sandwich breakout. Okay. And AMRX. Nothing great here. They failed at the 50. They're back below the 200. If you're long, you can stay long, but I wouldn't want to see this open lower tomorrow. It needs to open positive and get up through the 50. Gill for long? No, not yet. You don't have any signs of buying. That's the whole purpose of using candlestick charts, is to see when the buying started. This would have been one of those that if I bought on this day, I would have closed it out here, because where is it? It's back below the T-line. So it told us there's no buying going on right now. And GMNK, nothing. That's an ugly chart. I wouldn't be long or short. Bud, another one you can get ready to buy on strength from here. Amazon's in an uptrend. If you're long, stay long. If you're thinking of buying, you wait for it to bobble out through the 50-day moving average. T-Mobile, nothing. If I was short, I'd be ready to cover it, especially if it came up through today's high. BP, you can get ready for long term, but I'd still wait for it to get, I wouldn't buy it until it got up through the T-line. And Occidental, nothing. Would not be long or short this one right now. this Ranger Resources. This one, this is why you want to see what happens once they get to a resistance level. You had a doji close below the T line. I would have closed it out today, telling you they weren't going through the 50. And CHMA, this one you get ready to buy if it opens positive with the expectation. There's a wee little teeny gap right there, putting you in the right direction, and then probably the 50. And CCXI, another one you don't do anything with. You wouldn't be short, but you wouldn't be going long until it gets up above the T line. And ExxonMobil, if you're short, you stay short. CCL, nothing yet. I would have covered the short position, but I wouldn't be going long. Royal Caribbean, wouldn't be buying until it gets up above the T line. And Norwegian, same scenario. It's basing, but you can buy once it gets back up above the T line. CVLT, good buy. IQV, stay short. Zynga, no, JB, that's still ugly. I wouldn't be long or short this one. Win, this one you get ready to buy if it starts coming up through, or you definitely want to see it close above the T line. All right, if the pre-market futures are showing this is going to open up, it basically looks like it's going to open up about where it opened today. Down 582, so that means right about in here is where it would be opening. If it started trading positive from there, that's probably a good reversal pattern. IMAX needs to stay up above the T line, which means it has to open positive tomorrow to stay in it. And CPRT, nothing here. If you're short, which would have been hard to do through this time frame, you can stay short, but I probably, if you're short, stay short, but that I wouldn't be going long on this one. Let's see, ZDLBY. No, I don't know what the symbol is for Dobie. Right, DBY. Nope. DBL. Nope, don't know what it is. DLB. Dobie. Nothing here. If you're short, you stay short. For a 500-point drop in the Dow, there's lots of good setups. Yes, so that should be telling you something. That when you start seeing the Dow down 500 and you're starting to see a lot of stocks starting to trade positive, that's kind of giving you a indication that maybe the market isn't as compelling selling as what you would think. So those are other indications. Adobe, needs to see something strong from here. For us candle hams, when would you be looking at your swing trades each day? All day long. I've only got a few positions on right now. One is Ping because of the, because of this belt hold. However, it has to open positive tomorrow to stay in it. I'm in RAD because it's bounced right back up, which took my worthless calls right up to very good calls again. Got calls on Zoom and one more. Oh, SPTN. still long this one. T-Doc, you just stay long as it stays above the T-line. I would expect this probably can now be running along this upper trend channel. Up 500 points, okay. Now remember, that doesn't mean anything until we get to tomorrow morning. And NTNX, that's a good looking chart. That one you can buy. There's a wee little teeny gap right there, which would be your first target. Okay, so the point of all this is, for the first time in probably a week, we've been able to find a lot of good charts that weren't trading indecisively below the T-line. They're now starting to come back up above the T-line, which has given us a indication there's now some strength coming back into the market. Especially if they open this market up tomorrow at this level and start taking it up. That's your kind of your morning star signal, kicker type signal. After a couple of dojis, that's a pretty good indication that bulls may be at least supporting at this level. How much time are you giving your call and put options? 38. Daniel, if I think the bounce is going to be relatively quick, I might be going out 2 weeks. If I think the calls are going to be, well, sometimes I can't stay that close. I have to go out 30 days, so there's some, and I'm trying to think which ones. There's some that don't have day or weekly charts. They might be April's, so I'm going out to the April's, which is still 4 weeks away. I don't know what that means, SP. I don't have the volume on here. Yes, when you start seeing this, telling you you're starting to get a indecision down here and they're starting to support, that means somebody's probably buying at that level. Same scenario over here on Boeing. They gap down, dojis, little indecisive day, spinning top in the oversold area. That's a good indication they're starting to buy down here. You buy options at the money. It all depends, and again, that's up to each individual, Bob, of what your risk-reward factor is. So sometimes if I'm looking at an option on Boeing, which I looked at today, some of them are way too expensive. Now, the reason some of these options are pretty expensive right now is everybody that's speculating are still paying up for the option prices because they think if things turn around, it's going to move pretty fast. So you've got to decide which ones you want and how far out you want to go, how far up the ladder you want to go. So that, again, that's up to each individual. Yes, you might be better off doing a spread. I couldn't afford Zoom calls, so I bought some spreads, which is just as effective because my spreads, if they triple, would have been the same as buying some of these options at a high price and have them go way up here to triple. I get a lot better leverage out of the spreads. I don't trade Delta, Ron, because the Delta in this stock up until this point means absolutely nothing as far as what's going to happen here. So remember, the reason we're buying candlestick charts and signals is because we see a definite change of investor sentiment. We're more interested in what the new price move will be, which will be substantially probably stronger than what had been setting up or creating the Greeks up until that point, because this is going to have nothing to do, or the delta, gamma, beta, have nothing to do with what this price move will do. With VIX dropping, option prices should drop, right? Ooh, I don't know what that correlation would be. So I don't know the answer to that. Yeah, the premiums seem to be relatively high. But relatively high might not mean anything. Well, again, right now Amazon options would be way too expensive for me to buy options at $34 a pop. But I might do a spread up here. It might be $7 that could go to $20. Zoom is a long way away from the T-line, but it's still in a pattern. Remember, we're buying the pattern, not the T-line. So now, if this went up here tomorrow, and the T-line was right here, yes, now I might start flipping to my 10-minute chart. Okay, I guess with that, what do you discuss in options trading room? Specific setups? Yes. Over there we've got some good traders. There's only about 25 people in that room, but that obviously the terminology in that room is a lot different than in the main room because it's more option terminology. But people will come in and say, all right, I'm buying XYZ and I'm buying the April 30s, and or I will put out recommendations saying, all right, I might be buying the XYZ 50s or buying the 55-60 spread, which makes more sense. So we go through different strategies that make more sense based upon what the strength or what the pattern is of the underlying stock. Okay, everybody, have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.